Hey guys, welcome back. Gamestop discounted cash flow. A couple days ago, I presented the model to you and I wanted to get your guys' input, any questions that you have. A couple of you had some well thought out questions and I appreciate that. Some of you guys went, completely clown car off the rails because I don't know, you're emotionally invested in this play and you don't really understand how discounted cash flow analysis works. So I want to address both groups, and let's start off with a couple of the questions that were asked about this analysis. Number one, where is Bitcoin? Bitcoin is not on a DCF model because we only model assets or income streams that generate cash. And yes, Bitcoin does show up on the income statement as a unrealized gain, but it's not a cash generation that you can measure a cash flow on, which is why I also did the sum of the parts analysis so that we can look at that. And I published that video the next day. So hopefully that explains to you why Bitcoin is not on here. A non-cash generating asset will never be on a DCF model. It just won't. Another question people asked is, was all of GameStop's cash included in your model? I put it up on the screen here and you can see, if you just pause the screen and look at it, you can see the cash balance that we're calculating the interest income off of. I have it at GameStop's current cash balance and I have it growing every single year up to almost $10 billion. And that is assuming that GameStop does not increase their cash by selling more convertible notes. And if they do, hey, it's really easy. We just go up here to cash balance in the assumptions. Let's say they get their cash balance up another 1.4 billion with another convertible bond raise. We just change this. This is the beauty of having a model. You change this one number up here in the yellow assumptions and everything down below here in interest income recalculates, and it recalculates the fair value. But why am I not including the potential of them doing more cash raises? Because that's not how DCF models work. We're not trying to think of every possibility. We're trying to value what is the fair value today based on things that we know about today. There were a couple of comments about net income. One guy said your model doesn't account for net income. Another comment was, we're expecting GameStop to make $500 million. Why aren't you factoring that in? Let's address those two questions head on, because again, everything is here on the model for you guys to see. Basically, when we are looking at net income, we have no PAT plus the interest income. And if we look at year one, $344 million of interest income and the NOPAT of 113, guys, that's $460 million just about. And if we wanted to model, what if the net income operations and interest together was $500 million? That is easy enough to do. We could change our assumption up here in the top right of the assumptions from 3.37% operating margin to, let's say, 5%. You can see NOPAT changes here to 170 million plus our interest income. There's your $500 million, and it will calculate the fair value for us down there. Someone said the operating margins and the revenue assumptions you are using are not realistic. I just want to let you guys know the operating margin, 3.37%, came from GameStop's numbers. If we go to stockanalysis.com, go to the income statement, go to quarterly, scroll down to operating margin, 3.37% was the most recent quarter. If we switch to trailing 12 months, the operating margin is 1.58%. I tried to go with something a little bit better than trailing 12 months. I went with the most recent quarter, and we could say that what if operating margin gets better, and the model can certainly show us that. But in my first video, I just wanted to kind of get you accustomed to how the model looks and how it operates, and we can go in and make changes to this. In fact, down below in this model now, I have a new sensitivity table that I'm going to show you where we can change both the revenue growth rate and the operating margin and see in one table all of the results, everything that you would want to know, what needs to improve in order to get the fair value price that I want to see. Revenue growth rate, I have it at -7%, and someone said you can't do that. This is a cyclical business. It might be cyclical on short-term, quarter to quarter, but we have a 10-year trend here of revenue going down. And if we look at the analyst forecast for revenue, I know some of y'all don't like using the analyst numbers, but let's just compare out of fairness here to me for a second. The analysts are predicting $2.5 billion in 2028. That is fiscal year 2028, which is calendar year 2027. And when we look at my model, compare Michael Pachter's $2.5 billion revenue expectation to what I have for 2027, $3.1 billion. Not near as pessimistic as what the analysts are predicting for GameStop. So I think that I have been more than fair in using a -7% revenue growth rate. It's not near as pessimistic as an analyst is looking at, and maybe that's why his final number came in even lower than mine for fair value. But look, I'm trying to do a fair and reasonable assumptions list here. Really, I think what we should focus on not so much is the revenue, because GameStop is going to continue closing stores until they tell us that they're done. But maybe the most interesting thing is what is going to happen with operating margin. So with that in mind, I added a second sensitivity table here, the revenue growth on the left-hand axis and the operating margin on the horizontal axis. Let me zoom this in here. This table shows us what happens if we change this revenue growth rate in the top of our assumptions and the operating margin. And instead of me having to type in and see how each one individually tweaks the bottom left number, this table just computes it and shows all of the different outcomes to us at one time in one picture. Using the assumptions from my first video, we have the result in the bottom right-hand corner of this table using a -7% revenue growth rate and a 3.3% operating margin. We get 1559 fair value. However, you can see on the left-hand axis here, we can also get results for if the revenue growth rate is flat, if there's no more store closures, if the revenue starts increasing 7% and 15%. Those are just a couple numbers that I picked just to show you guys how a sensitivity table works. And then on the operating margin, we're currently using 3.37% at the far right-hand side here, but we can model by changing these things individually or just looking at it here in the table, because it already computes it for us. 5%, 8%, 12%, 14%. And just looking in this table for results that are similar to today's price, what would GameStop's performance need to look like to generate a fair value close to today's price, which is fair value plus speculative value? They would need to have either a flat growth rate right here, 0%, and a 14% operating margin. That is operating profits divided by revenue. Or they could have a 7% growing revenue and a 12% operating margin. Either one of those would yield a fair value close to today's price. Please do not allow anybody blabbering at their screen to tell you that providing you a little bit of educational talk on a discounted cash flow model is being bearish on GameStop. I'm certainly not bearish on GameStop, or I wouldn't be buying it. I wouldn't be buying it for the past several years. Education and topics that maybe no one's talked with you about before might seem to challenge some core beliefs that you have, but what I'm doing in these videos is sharing with you how I analyze GameStop. I've had a DCF done on GameStop for a long time. We've been talking about it in my Discord for a long time. I've not been talking to you guys about it because people get upset when someone talks about something that doesn't confirm their bias, their belief. But look, calculating present value of cash flows or future value of things are basic finance formulas. And yes, math is allowed in the world of finance. And I guarantee you that Wall Street is doing an analysis just like this. And when y'all go on social media and say, I don't understand how the analysts are coming up with their price, I'm trying to provide you a window into maybe understanding how they are looking at it. It doesn't mean that you need to agree with it. We have our own speculative valuations that we put on the stock. And there's a lot of us that are doing that because it's trading at $23, not $15. $15.59 is not my price target. I'm in at $21.61, and I think I will exit that trade profitably when the stock gets its next volatility spike up. But until news from the company changes, where I can change some of these variables, maybe when we get the next quarterly results, this is what I have right now. And if you don't like the number in the bottom left-hand corner, you can look at the sensitivity analysis table here and look at what it would take GameStop to do to get to a number that you do like. This is a tool. The tool is only as good as the assumptions that you plug into it. And I've tried to provide conservative and reasonable assumptions that could hold up to scrutiny. This is not a hype or a pump video. Look, there's plenty of other channels that is all they want to talk about. It's like the BBBY people have their hype channel. There's GameStop hype channels where they don't really focus on facts. They just tell you this thing's worth $50, $100, $1,000, $3,000. They don't provide you any evidence. This is evidence. This is math. It is not debatable other than what assumptions do you want to plug in. And I appreciate you guys asking the questions. Keep on asking the questions. It will help me refine results, like providing you a look at revenue versus margin and how different things might turn out if we change the numbers. Hopefully you understand that yes, all of GameStop's cash and interest income, $8.6 billion, is included in this model. And hopefully you understand now why Bitcoin, the Bitcoin treasury, is not included in a DCF model. If you have any other questions, feel free to let me know. Happy trading and go GameStop.